It's Wednesday, the 4th of December, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we have 5 stories to get through in 5 minutes, so let's get going. Story number 1 is actually a big one, isn't it? The Australian share market has topped 8,500 points for the first time, taking full-year gains to more than 11%.
Confidence that Australia's economy will avoid a recession and continue to grow, hopes that interest rates will fall next year, and a relatively optimistic outlook for the global economy is pushing the market to new highs. By the close yesterday, it was just a touch under that 8,500 points. There's a bunch of companies trading at or near record levels. 9 of the top 25 are doing so from a broad range of sectors. Goodman Group, which is the property company, Macquarie, Aristocrat Leisure, the gaming machine maker, WiseTech Global, REA, Xero, Brambles and Pro Medica. CBA, of course, the biggest stock on the market, now worth $265 billion, nearly 30% more than BHP. The only real disappointment over the past year or so have been the big miners and energy companies. That's on the back of commodity prices. There have also been some really good performances from one-time blue chip companies. So AMP's up 70% over the last year, JB Hi-Fi 90%, Qantas trading at a record high, up 65% this year.
Sean, you've taught me over a long period of time now that equities are traded on future earnings. So basically, a share price reflects what investors think is going to happen. If you take that, then it seems like investors are confident about the future, right?
There seems to be a sense that the economy has bottomed, even though rates are still at 12-year highs. We'll find out more about that today with the release of the economic growth figures for the September quarter. Economists are expecting a 0.3, 0.4, 0.5% rise compared to the 0.2% rise in the June quarter. Still being a per capita recession, which is probably why it feels like times are tough. But market makers, investors are confident that the worst seems to be over.
All right, moving on to story number 2 now, Sean. And Qantas obviously hit a record share price yesterday. We just talked about markets. One broker, though, reckons that it's only going to get better, and it's thanks to travelling baby boomers.
Yes, that's according to investment bank Morgan Stanley, who reckons Qantas and Delta Airlines are 2 global carriers benefiting from a pivot in luxury spending away from luxury goods, handbags, clothing, to premium travel. That's the switch. Global luxury companies like Kering, Moncler and LVMH have boomed post-COVID. In part, though, due to a slowdown in Chinese demand in more recent times, they're now struggling. There seems to be a shift, according to Morgan Stanley, to luxury travel. The baby boomers will only encourage it. Qantas and Delta set to ride that next wave. Qantas' share price closed up 2% yesterday to $9.03. It's worse during COVID. It was trading at about 25%, about $2.30, $2.40, compared to yesterday's $9.03.
Yeah, that's a staggering recovery. Sean, story number 3. Woolworths says this strike by warehouse workers in Victoria and New South Wales has cut $50 million already in sales from its supermarket business.
Yes, and they're still counting. It's a big problem for Woolies, which is struggling to keep stock on shelves. Dan Murphy's in BWS, nowadays owned by Endeavour, used to be owned by Woolies. They've got the same problem because they use the same warehouses. Yesterday, Woolies applied for an urgent order to ensure access to distribution sites in the 2 states. Woolies said it's been negotiating with the United Workers Union for 4 months, and workers want a pay increase of well over 25% over 3 years, above inflation, obviously. The union also wants Woolies to scrap new rules which would discipline workers for not operating fast enough. This is coming as the company is under pressure to keep prices low. We've got the competition watchdog, the ACCC, keeping a very close eye on Woolies and Coles. And in December, busiest time of the year, you need to build inventory ahead of Christmas. Problems for Woolies.
Yeah. Sean, story number 4. The founder, I love this one, right? It's just, it fills me, it inspires me, Sean. The founder of Buy Now, Pay Later group, Zipco, has resigned, cashing in $100 million worth of shares, and he's going to set up his own family office investing business.
Why not, I say? Why not? The guy's name is Larry Diamond. He resigned on Monday, sold 30 million shares at $3.35 yesterday morning, according to the Fin Review. He's still got 25 million shares, but he's got about $100 million of cash now. He founded the business in 2013 with Peter Gray, floated it in 2016. It got to as high as $12 a share in early COVID days, then tumbled to as low as 26 cents late last year. It's up 700% since then. Good luck to him.
Yeah, indeed. All right, last one. Story number 5. A judge in Delaware has knocked back Tesla's attempt to revive a $56 billion pay package for Elon Musk. That's 56B for billion. The judge said that the shareholders' overwhelming reapproval wasn't enough to override her previous rejection of the package.
Judge Kathleen McCormick concluded that Tesla's unprecedented effort to push the 2018 pay package through a second time, 4 months after she first voided it, was creative, but the board had no ground to overturn her original outcome, according to a story in the FT. Tesla vowed to appeal against the decision. Musk's response on X was simply absolute corruption. Tesla's stock has surged 44% this year, much of that coming after Donald Trump's election victory. That means Musk's stock options have jumped in value from 56 billion, with a B as you put it, Michael, to 100 billion now, helping push his overall wealth to $343 billion. That, of course, includes stakes in SpaceX, social media platform X, and XAI. If ultimately granted, it means Musk would own about 20% of Tesla.
That's big. All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It is Wednesday, the 4th of December, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.